Hello everybody, welcome to TraderMerlin Show. It is your Tuesday edition. Today is going to be an interesting one. We've talked so much about these markets having a little bit of struggles over the past couple of weeks. A lot of people thinking this might actually be the beginning of a potential market sell-off and maybe some sign of weakness going into the election. Well, that might not be the case. Everybody has an opinion about where they think the market's going to go today, and today we're talking market melt-up. The possibility, and you see the rocket, of markets just soaring to the upside. It may seem inconceivable, but Jeff Manson seems to think that it's a very plausible reality. Jeff, how you doing today?
Hey, I'm doing great. Thanks, Marlon, for having me on the show.
Always good to have you on. You always bring up some things that are exciting and interesting for me, so I'm happy to have you with us today. And by the way, happy to have everybody with us. I see some longtime friends. James from Hattiesburg, good to have you with us. I haven't seen you on. Caitlin Ocker, wow, Caitlin's here. See, she never watches the show anymore, but if I bring on a Manson, she's all into the show. Anyway, Tom, Raj, Koja, Naum, James, FX, good to have you guys all with us. And, of course, Thomasina's taking a class with your cousin right now. So walk me through a little bit of your belief system here on, maybe first explain a melt up for someone who might not know what that is. Start there.
Well, I guess the last real evidence of a melt up was back in the Y2K when we had the crisis where the world was going to come to an end because all the computers were going to stop working, you know, and all of a sudden there was a huge push for semiconductors, huge push for updating technology. There was a huge push to innovate and change, okay? And we're kind of in that phase again, and it's been quite a few years ago. I mean, it was, you know, we had the Y2K, which started that cycle move to the upside. The last part where it went parabolic was kind of that phase where we call the melt-up phase. And you can see where it started, oh gosh, probably about 1991 or so, where it started to really get parabolic. But the move that we saw on the indexes back then was almost vertical. But during that time, you know, keep in mind, it didn't go straight up.
Right.
But during that time, there were 5 corrections that were about on average, about a 10% correction. And we just did about the 10, 11% correction off the all-time highs that we just had back down to this 3,200 level. So every market since the 1500s that has had a melt-up, they tend to go very, very parabolic in their move to the upside in the last 18 to 24 months. And during that time, generally the markets double in size. And back in using the Dow, back during that Y2K boom, the Dow was at 5,000 and topped out above 11,000. Okay, we are in that kind of phase again, and we just had one of a few that are coming, big corrective moves and kind of freaking everybody out. Now we also have to remember that this last move up from the let's see, I'm going to pull up my screen here for a moment. Let me see.
I'll bring up, I was going to bring up the SPX too, but I'm not enabled for data on that account. All right, perfect. So I got your screen now.
Okay, super. This melt-up phase, or going from 2,200 on the S&P all the way up to 3,400, this is only part of that move, but we have to consider that this move was generated because of the $2.2 trillion that came into the market. Now, they came into the market at all different avenues. They came in as stimulus checks. They come in PPP monies. The companies were bringing in money, and now they've changed, they've innovated, they've reduced the workforce. All of those things were happening, and this whole move up was $2.2 trillion going into the market. Now, if there's another stimulus package that comes in, could we be looking at another similar move? I mean, this move here, as I put some numbers on it, was about 1,300, little over 1,300 points, just give or take. It's not exact, okay? And if we did another 1,300 points up from this 3,200, that's going to put us up about 4,000 on the S&P.
Yeah, about 4,500, yeah.
So if we get, I think they're looking at 3 trillion. The Democrats just put out their 2.2 trillion. I think Trump wanted more, so we'll see how that shakes out. But if anywhere from $2 to $3 trillion come into the market, that's going to send this thing on fire. And it doesn't matter which political party is coming into the market. Okay, during this election time, nobody knows until the last vote is tallied or unhidden.
Right.
Okay?
Yeah.
But these corrective phases, you have to be very careful with and keep a vision on what is your goal for the longer term. I mean, price bounced back up into this area today, and within that area, let's just say the low right there about 3,300 up to about 3,400. We went right into the middle of it.
Mm-hmm.
That's still bearish short term. Okay, so what remains to be seen is where we pull back down to the 3,200 and make a double bottom like we've seen several times throughout history, where price makes a strong drop and then we start a new rally. So this corrective phase is taking a little time to work its way through. Okay, so I don't know. I'm a strong believer that we're going to continue to move up and move higher. I just have to stay focused on which side I'm going to stay on. And if we start breaking down below this 3,200, we'll start looking for the opportunity to short and participate in it.
And I think that's the important part there. And we have some people who are probably, banging the table right now going, absolutely, Jeff, we'll see a melt up. And you're right, if we do get a couple extra $1 trillion in there, it could be a huge catalyst for these equity markets. And push them higher. Of course, there's always things we could point at that would pull this market down. Of course, you could pick one side of the political party raises taxes significantly, and that could be an event-changing type of thing. But for right now, if you just look at it face value, you start getting a couple extra $1 trillion in, this market could absolutely vault up. But I think it's important what you just said there at the end of that, which was, if we start breaking 3,200 on the S&P, which was a logical bounce point, a week ago, that was clear that was one of the major spots where it should bounce at. It did. If we get down below that, though, you're going to have to change your opinion a little bit and maybe just have to start playing the short side. So what I'm hoping that the viewers get here is that you're not married to this idea that there's going to be a monster market rally. It's a hypothesis on your part, which if it comes to fruition, you'll be capitalizing on it.
Absolutely. And I'll get the bragging rights because I said it here first.
Of course, no problem. I'll give it to you. Jeff, when you
even if I'm wrong.
Yeah, when you're wrong, I'm going to put all the Twitter feeds. Jeff was wrong. I wouldn't do that. Hey, I just like when people voice their opinions about things. It's when nobody knows who is going to be right or wrong until history presents itself. And one of the funniest examples of that, Jeff, was in I can't remember. The 2007 was my first appearance on CNBC. That was in December, and they liked it so much they had me back on in January. And I said, if we get below 1260 on the S&P 500, break out the bulldozers. We're going down in a big way. And they booted me off the show. I was removed from CNBC because I guess I was overtly bearish, and at the time, that was a pretty big call. I guess very bearish, and in hindsight, I nailed it. And it didn't really matter whether I was right or wrong. When it happened, my trade plan was, okay, let's just go and start building a bigger short position. And it turned out to be a great year for me in 2008, where most people suffered. So have an idea, either bullish or bearish, and follow that plan, and hopefully we'll be good.
I still trade short term, so it's in and out and getting trades, but I try to stay in that direction of the higher time frame.
Yeah. Richard says, what if no stimulus? Nothing is guaranteed. And that's a good point.
Good point.
I don't want to be political at all, but you if you're the Democrats, you probably don't want to. You want to do whatever you can to not let it happen because it'll make the current administration look good if they continue to do more bailouts. So this is where it just gets so political, and it makes me worried that politicians might not do the right thing for our country or do too much knee-jerk reaction just to make themselves look good. So, but that's the beauty of the political parties. I think more importantly, what we need is a 3 or 4 or 5 person ballot, so it's not just red or blue. All right, Jeff. When you look at we'll go to a whole different politics show on that one. When you look at a potential market melt up, how are you normally playing that? Are you going to be saying, most likely looking at the futures market and saying, I'm just going to go trade the S&P or the NASDAQ futures to the upside? Or do you break it down a little bit deeper and look for maybe the sectors within an economy that might be performing better, like technology has for the past 6 months? Are you that type that refines it down to those levels?
Yeah, one of the things that I monitor is the Fidelity Select funds, and there's like 63 funds that are very specific related, sector, industry related funds. And right now, Fidelity is only putting money into about 9 of them. So when you start looking at where the big 900-pound gorilla is going and where they're putting money in, based on the trends and the money flow and coming in, you kind of stick with those top 9 sectors, and you start focusing on what direction they're moving. See, when it comes, and also during this phase of the melt up, this is probably when you and I were both getting started doing in the day trading, the prop firms and things like that. And you could throw a rock at the market and make money during that time. I mean, there were huge gains, but there was also huge losses when we weren't prepared for the other side of it. But the stocks and options seem to be the best vehicle during this time. Short-term trading on the S&P or future products can be very dicey. If you're on the wrong side of it, it can go against you pretty quickly. So I've started to focus more on trending environments and using trending type indicators, using trending type software to help me identify, what is the general trend, and also be prepared when that trend starts to change. But stocks and options have become more a center focus.
Okay. Let's dive into that a little bit deeper. So you mentioned you're using a lot of tools to help you identify trends. Now, I'm the smart ass who's going to be like, dude, what tools do you need? Can't you just look at a chart and see that it's moving up or moving down, right? Of course, that's because I've looked at millions and millions of charts over the years. What are you using? I know most people's, the gateway drug into trend analysis tools is going to be moving averages, or you could use MACD or things that keep you on the right side of a trend. What sort of tools do you use? Just kind of curious to get your take on it.
Well, actually, do you mind if I share my screen again? I'll just demonstrate for you.
As long as it's a PG-13 or lower, we're good.
All right. No rated X.
Yeah. No, not today anyway. That's a different show. All right, I've got your screen up.
Okay, yeah, this is one that just came on my radar screen today. SQ, which is Square, which is as we start going into earnings season. There's some fundamental information behind using this or buying into this stock. It's pretty volatile, but it does have a lot of room to run. About 26 years ago, I was introduced to this software. It's called Entry Point, and by my mentor. My mentor actually created it. My mentor, Skip Higley, worked with Wells Wilder. You can see that there's a forecast tool on here, and that forecast tool was when him and Wells were working together, and which is a technique called Adams reflection, and it projects out, and it's about an 87% accuracy as far as where it goes for each bar. Not 100%. Okay, the market can change anything. There's 32 different indicators painted on here, but in different colors. And with some indicators, once they max out, they're of no use, so he removes them and puts them back on. Yada yada yada. I've been using it and practicing this with the Dow futures just over the last few days, and just documenting and trading the micros on this. I took 2 micros on this instead of the actual mini-size contract, but still 122 points as the trend started and worked its way up and went sideways, and then of course another trend and another trend. These are nice little point runs, and if you were trading a mini-size contract at $5 per point, just one contract, you done pretty good staying in the trend. It's just when this stuff happens, it gets a little bit more uncomfortable.
Right.
Okay? So the forecast tool is based on Adams reflection, Wells Wilder. The dots are below the price bars, or some ways that we can use to manage the trades. As price starts moving, we kind of adjust up. We have main market trends down here, so I don't have to go out and look at a whole bunch of other charts. It just basically calculates the equity indexes, and it gives me a main market trend. Blue being strong up, red being strong down, magenta, things are churning, and of course yellow is kind of neutral. And when we have everything level 5, which means all blue, it tends to be a very high probability place for making a trend. So using a higher time frame here, this is SQ, this is a trade that I took this morning. I had my entry, my stop, my target, and this is not getting in supply and demand, which a lot of folks have seen. This is not a reversal type trade when price drops into a demand or goes into a supply. This is more jumping in and going along with the trend, kind of like what we used to do back in the olden days.
Yep, jump on the train.
My data analytics software over here is what really helps me out, because anything that's a level 5 long, okay, the trend symbol, and then it shows me how many days the setup bar has been intact, how many days the longer term trend has been intact. So it really shortcuts. I only looked at maybe about 10 different stocks right here, because all of these were in trend or changing at this point. And of course, I had to scroll way down below to get some of the brand new opportunities, like Wells Fargo just on a daily chart just went level 5 red. Okay, and Wells Fargo is not doing too well these days. Okay? Now, I'm not going to short a $23 stock, but you have to do a little bit of your own research on this. But it's just a trend following tool that I've used to identify quickly. I can go through like NEO. NEO's been, wow, $2.17. That's a huge 11% move on this.
Yeah, it's a crazy one.
Yeah. It looks like it's getting ready to get more crazy. So the opportunity to get in is on my 60-minute chart. Now, at the beginning of every trend, I have this little setup bar, and that setup bar tends to be a place when price comes back down to, that's supply and demand. There's still some unfilled orders in those areas, okay? But quickly, I can look at the weekly and daily chart and see that it's either level 4 or level 5 uptrend. And then I can drop down to a 60-minute chart and just wait for price to come back into that area and splice it into the larger time frame. So still a top-down approach. Trading options on these and using the forecast tool for that, doing some vertical spreads have really minimized the risk.
Yeah.
So
I feel like I need a secret decoder ring for those charts. I mean, look at that thing. It's rainbow bright. You got to buy a box of Cracker Jacks to get my decoder ring. Oh, I can't say Cracker Jacks anymore, right? That's offensive. I figure that's an offensive term now.
Is it really?
Oh, I don't know. We'll call them Caucasian Jacks. I don't know. Everyone's so sensitive nowadays. So, a couple questions come up here. First off, Noam says, how do I get that tool? You see at the top it says underscore EP markets, I think, on your watch list there, your radar screener. Go on your radar screener.
Yeah.
The top, and this is a subscription indicator, correct?
No, well, yeah, a yearly subscription. I'll have more information. Maybe on a later show I can tell you how to get this. Right now, my mentor, because during this whole crisis with the coronavirus and things like that, I went back to my mentor and said, hey, what's going on? You know.
Yeah.
And this product, he just uses, he goes, man, I got 8-figure accounts now. I don't even look at the daily charts. I only use weekly and monthly. You know, and he's just like, I don't want to be bothered with all that day trading stuff.
Yeah.
I know you do, Jeff. So my mentor had left this on the shelf for 9 years. So I'm working with him to make this more public and bring it out of the closet again. And one of the challenges we're having is that all the algorithms and everything built into this is uses one particular platform, and that's TradeStation.
Right.
So you have to be a TradeStation user in order to make it all work. So just stay tuned. As soon as I have a place where you can go and acquire it,
you guys can stay in touch with.
You.
Yeah, I have on his screen, guys. You can see it's if you go to Twitter, it's at JMANS1111, so 4 1s. That's the way you can stay in touch with Jeff to see any updates on it when there might be some releases on it. But yeah, drop trade in TradeStation for now. Second question from Naum. This is a good one. It says you mentioned earlier when you look at that chart of Wells Fargo, he said, "Yeah, I'm not going to short a $20 stock." Naum says, "Why not? Why would you short a $25 stock?"
Well, I'm looking for a bigger move. Usually $25 stocks don't have the volatility unless I'm using a lot of shares to get a small move. And with the stock account that I'm using, I can't trade a lot of shares in it. Okay? Mm-hmm. It's kind of a smaller size stock account because I'm mainly futures and Forex and in my personal trading, but getting back heavily into the stocks and options as this market starts to do its things is my belief at the melt up.
Yep.
But at $20 stock, as you saw, there's not much more downside. I mean, you got $23 to go to zero.
Right.
But is Wells Fargo one of those banks that they're going to save? Or is just Wells Fargo one of those banks that they're just going to let somebody else take over? It's kind of strange. Wells Fargo's been in business for so many years. To see it down at $23 is just... that's a shame.
Well, you remember watching Citigroup down at just a couple of bucks. Stranger things have happened. And I think, the thing for me, and it kind of ties right into this, the same example that Jeff was giving, I'm okay actually shorting a $25 stock, even $20 stock. But as you start to get lower, you got to understand that there's less meat on that bone, so to speak. If I short a $15 stock, I'm really not giving myself a lot of room. Certainly, I could day trade it, right, and go from 15 Absolutely. And scalp a buck out of it to 14. That's fine. But as far as longer-term investment stuff, the risk is just a little bit too high because you have unlimited upside potential, and you're trying to make a limited gains on this one. So it's a little tricky for me to short a stock that's too cheap. One of the considerations, if you are going to be shorting something like this, is look at the volume at the bottom, right? With Wells Fargo, you don't need to worry about shares. For example, Jeff was saying, the only real way you could trade this and make any sort of money is if you had big share sizes. And, it's trading 1,000 share, 2,000, 5,000 share blocks of this, more from a scalping perspective or day trading perspective. You have plenty of volume. It's averaging about 40 million shares a day, so you don't need to worry about that. If you look at the stock that I was trading last night, or yesterday, LRCX, you guys will see that now all of a sudden I could have problems trading Lam Research based off of, it's averaging on the daily about 1.7 million. It's a little bit low, right? It's starting to creep down. I would be a little apprehensive trading big share size of that, but it is also a $330 stock. So there you go. Let's see. Adam says, what would be the load the boat zone for Jeff on the ES off his magic fibs? Ooh, great question. We all love the load the boat zone, don't we? Is there a special spot for you where you just go, man, this is where I'm just beep, beep, back the truck up and I'm buying everything?
Oh my gosh.
I'm putting you on the spot here, right? That's
Well, right now, because of my lowest risk point, if I'm proven wrong, it's going to be about 32.27, 32.05 area. That's if it pulls back down to that area. I can share my screen and show it to you real quick.
Yeah, go for it. Always love getting shared.
All right, so yeah, right down here, just still on the bigger picture, 32.27, 32.05. I don't think this downtrend is going to be, this move to the downside is done until we get back above about 34.18, 34.20. And once we start getting back above those areas, I'm going to start to feel more warm and fuzzy with this last line in the sand up here, about 35.37. Then we're on to all-time new highs again. We've got a lot of work and a lot of proving to do because there's as the market starts working its way up, we see it took all day and slowly grinding up, and then all of a sudden it dropped and swept everybody out. What that's telling me is there's not a lot of liquidity in the markets, and also watching CME Group when they're increasing and decreasing the margin rates, you have to be aware that a lot of times they're increasing the overnight margin rates simply because the liquidity and how they measure it is starting to dry up. So they too are kind of waiting for that stimulus package to come in, and if the volatility gets too crazy, then they're going to go back to shortened trading times. They're going to not let us trade the margin in the last hour of the trading session. There's so many different mechanisms to kick the small guy out of the futures markets.
Yep.
Okay, so be aware of that volatility. If you're starting to see very quick drops, we saw one just right near the close today, where things were moving up very nicely, and then it just suddenly it dropped very quickly. So I mean, this was a nice little move up from the area. That was my Fibonacci demand zone, 88.6. Price came down in, nice move up, and then within a couple of minutes, all of a sudden it just gave everything back and stopped me out. And so these fast drops and fast rallies up are typically where we have very light volume, not that there's more volume. And it makes for a pretty dicey trading environment.
Mm-hmm. All right, let's see a couple other quick questions here. This is a good one coming in from Gemini. It says, if Wells Fargo stock is down, are retirement funds affected because of this? And Big Eb, you answered it correctly here. He says, the only way that they'd be impacted is if you were invested in Wells Fargo in that fund, right? Because Wells Fargo has obviously been drifting down. A retirement fund is not going to be necessarily impacted. Now, let's say that Wells Fargo has a basket of mutual funds that they create. That's not going to be impacted by the decline in Wells Fargo's share price unless those mutual funds hold Wells Fargo stock. That said, what could happen is if they start to get, obviously Wells Fargo's had some bad publicity over the past couple of years, that could cause people to lose faith in investing in those mutual funds themselves, and that would in fact lead to maybe potentially withdrawals, and that could impact those mutual funds that Wells Fargo has, but not a declining price in Wells Fargo. That's separate. That's a different piece.
Great point.
What else do I have? Caitlin says, what option strategies do you like the most?
Well, for the most, I'm a directional trader, so I like to go long calls and long puts or short. Well, again, the account size is not big enough to do the naked calls or naked puts, but those are, if you have the account size and the ability to do those are some of the quickest movers. The vertical spreads, either bull call spread or a bull put spread to minimize the amount of capital being used on some of those tend to be the ones that are right on the front line for me. I don't get too complex in there because I'm a chart reader and I like trading the momentum, so I want to get in when things start firing up. Mm-hmm. And I want to be able to maneuver just a little bit and also have a little protection.
Yeah, I'm a simpleton when it comes to the options. I love directional. I like buying calls. I like buying puts. I'm also love selling options. So I love selling puts, especially in a market like this. I could be selling the SPYs right now at 320 and be looking to buy it if it comes back down that demand zone again. Great. Let me collect some premium to take a risk to buy a market where I'm happy to. Huge fan of it, and also covered calls is something I'd like to do as well. If I have a position open to help generate a little extra income, especially if I'm not quite sure where things are going to be headed, why not use covered calls in that manner? So those are my favorite. I don't do the big strategy stuff. I'm a simpleton.
Yeah, beautiful strategy. I mean, the covered call strategy is so underrated. It is such a powerful technique, especially when you're holding long-term stocks. I mean, look what you could have done with Tesla or Apple, just writing calls on your stock you own, not only for protection, but just for volatility too.
Jeff, on that Wells Fargo chart, which I'll bring that screen up here so the viewers can see on my side. Let's bring up WFC again. We talked about potentially shorting this one, saying, not really that comfortable shorting a $20-something stock. Some of you might be, and that's okay. Liquidity on Wells Fargo is great. Otto, I think it was Okunola, says, what about buying put options on a stock like Wells Fargo and anticipating this can go down using options? And I think that's probably a good opportunity as well.
Absolutely. If you think that Wells Fargo is going lower, then you can buy a put as a directional way, kind of a different way other than shorting the stock. Go back and find the demand. And as I'm going to take a quick peek here. I mean, all the way to a monthly chart. I mean, well, I guess we do have about $10 going way back to about 2009 when it dropped down.
We could make the argument on the monthly, Jeff, that 2000 and 2011 low. I mean, we're kissing it right now. I mean, so you could make the argument that there's a chance to take a stab at it at these levels.
True. And yeah, I'm seeing right there. I mean, right where it's basing right now at 22.77. One more quick thing. I'll share my screen one more time here.
Sure. And for Okinola, one thing you might consider is also the implied volatility of these things. Right now, if I'm not mistaken, Wells Fargo is very low, probably in the 40 range for implied volatility, which is pretty good. So as a put buyer, you want those options to have a low implied volatility. If you were a seller, 42 is there's not much meat on the bone for you, so you might want to move away. But yeah, this might be a good opportunity to be buying some puts on Wells Fargo.
The other thing that you can, when you're considering shorting the stock, is to come out and look at some of the highlights, the fundamentals here. Financial strength is one of those things that I'll come out and look at, and especially right here about the book value. Okay, most recent quarter, the stock is trading at 23, and fair value or the book value based on their holdings and things like that is at 43. Now, typically, if this is a stock in such a way that where you have the come back over to the highlights, that pays a dividend. This is a value-related company, okay? And with a value-related company, typically they'll trade about back in the day it was 1.8 to 2 times book. So if we go with 2 times book value, then, to buy this company and all their holdings, somebody'd have to offer out twice that amount. Okay. The stock trading at 23, it just takes one analyst to come out and say, man, this stock is way undervalued. Look what they hold. So if the stock is overvalued and we have a level 5 short, then I would be more adept to taking that trade short. But down here, as what Merlin was pointing out, is, we could take a poke at it. I mean, look at back in 2010, 2012, the market consolidated right here and then started its uptrend. We're back down in that 2010, 2011, 2012 area, and the lowest point during the financial crisis was at $8.23. That's when all the banks were having some serious challenges. And so if a company is undervalued based on the book value, most recent quarter, that is a red flag to me to kind of stay away. Even though the $23 level, that is also another red flag. So just a little more in-depth explanation, digging into the book value and some of the fundamentals, is a very good resource there.
Yeah, one thing for you guys to note with that, you talk about Wells Fargo and its recent sell-off here. It's been looking pretty weak. Obviously, everybody looks at Warren Buffett as the Oracle of Omaha. Keep in mind, Warren Buffett has 237 million shares of Wells Fargo. So that should help you, understand that there's probably some long-term potential because he is one hell of a value investor. Mr. Buffett is, and he is lightening up his position in Wells Fargo as well as J.P. Morgan, but he's still all in on that bad boy. So I wouldn't freak out too much. But and there was a couple comments that came into the chat. Let me make sure get to that one here real quick because I'm looking at multiple things. Big Eb says, or sell puts where you're willing to buy. Exactly. You could be looking at this Wells Fargo chart right now and saying, hey, you know what? If I'm going to use this 22.50 mark as a holding point, so maybe somewhere in these candles from 2009 where it accelerated out, you can find some demand zone and use that. Maybe it's $20 as your buy point. Great. You can go out there and sell some puts for $20 for October. I don't know what that would generate you right now, but you could probably collect some premium there. And for me, it doesn't look like it's at too much of a risk, especially what Jeff just showed you. When your book value is way more than current share price, value investors tend to look for those types of things and buy them up. All right, Jeff, what else you got on your plate? I know you mentioned you're working on a bunch of different projects now, and I know you're still teaching classes for Online Trading Academy, which is awesome. What else you got cooking?
Right now I'm doing a couple of shows a week, just live trading with people that want to come in and trade. It's a company called Ticker Talker. There's a lot of different high-level technical guys, and I kind of found a niche with them at getting in, and so they like to talk about Fibonacci. They like to do analytics and artificial intelligence type techniques. So at Ticker Talker, they offered me a hey, you want to come in and do some live trading, which not many of those guys do. They talk a good show, but they seldom do live trading in front. There's a few of them that are really, really good, and it's getting in that group and kind of hanging around. I'm learning a lot more. As a seasoned trader, I needed to be around some people that were better than I was, a little more smart than I was, because trading alone by myself, I just kept getting into my own head. And, I need the voice of reason. That's why TraderMerlin helps me out too. It brings in the voice of reason and said, hey, what are you thinking about going up? This thing's going down. And it causes me to think, and so being around those other traders and listening to them has helped me. So at tickertalker.com, a couple of days a week, I'll go in and do some live trading with people that are just learning a little bit. There's a variety of traders that come in there.
Nice. So. And are you doing XLTs or classes? What do you got cooking on that front for OTA?
Well, I'm still waiting to get scheduled to come out and do some classes. I'd love to get back out on the road teaching. I was just in Minneapolis. I did a little 2-day show out there, which was a lot of fun. It just reminded me what I miss so much is being in front of the students and teaching and trading. I'm doing a lot online with the XLTs at this point, and just kind of making a living trading.
Cool. Awesome. Well, I look forward to you getting back in them XLTs and much more activity. Again, guys, I have his Twitter handle on there, which is at JMANS1111. If you want to know more, you can contact him. He's always posting stuff on his social media feed. So, Jeff, thanks so much for coming on. I love the green screen. I think we're gonna have to do some work. I'm gonna get you like a big flame background or some cool background for put on the green screen.
I've been searching for them.
I got a bunch of that stuff for you. So, Jeff, thanks so much for coming on today. I'm looking forward. If we do have the melt up, I'll be calling your praises because it certainly could happen. Certainly could happen.
Well, thanks again for having me, Merlin. Have a super day.
You too, Jeff. Take care. All right, guys, that was Jeff Manson giving us a little bit of insights into a melt-up potential. I know it seems inconceivable, but hey, he's right. If we get another trillion or two from our government in these markets, we could see some serious upside moves in the equity markets. And, of course, Level 2 Trading says, what is this? What are you guys trading? We trade everything in here, Level 2. It's all over the place. And, Caitlin, thank you so much. Good to see you again. Been a while. Actually, someone was talking about taking a class up with his cousin. Chris is actually teaching in Arizona right now an options class, or a futures class, so that's why we didn't get Thomasina on the show today. All right, let me go to a couple different listener questions. Actually, economic calendar. I'm going to go to the calendar first, and I'll move forward from there. Here's your economic calendar for tomorrow, September 30th. We do have a couple pieces of information which obviously are significant, like very significant. However, it's pretty much, I'm going to say, priced in. The reason it's priced in here is everybody saw the preliminary GDP number come out in August. If you guys saw the Monday Market Must Know I put out for Online Trading Academy, this is one of the main topics we focus on for the week, was this one here, where GDP is expected to go to negative 31.7%. Now, the previous number was 5, which looked in line with what we saw from 2008 and 9, and all of a sudden we're now looking at negative 31 as the final GDP number. Of course, that is the quintessential definition of a recession, is having 2 consecutive quarters of GDP decline or negative GDP. I believe that that's a part of it. I think we have to look at the economy, you got to look at jobs, you got to look at employment data, growth data, retail sales, etc. But most people will pinpoint on 2 consecutive quarters of GDP negative growth, and that's where we will be probably tomorrow. So we'll probably see a lot of negative headlines, which could spook some people tomorrow. So pay attention. My bias would certainly be to the short side, especially the way we kind of finished up there today. What else do I have on this one for tomorrow? You have crude oil inventories, which of course is always a roller coaster, and crude oil, as boring as it has been over the past couple of days, might get a little pop there because of crude oil inventories. You also have pending home sales, which are expected to slide again, right? There was a 5.9% increase in the previous month. Expected that to drop to 3.1%, so maybe a little slowdown there, but I wouldn't hang my hat on those numbers. I still think the housing market's looking pretty damn hot right now. All right, let's see. Talk about popcorn trade probability. Well, I don't have any popcorn trades lined up for you, Kevin. None of them going on right now. Okay. Let's go to, let's see, I got to ask my questions here. How high is the chance of a 20-30% correction in the market happening this year? I don't know, Leonid. I mean, that's just all speculation at this point. I mean, I can come up with my hypothesis and theories. I think what you'll see, maybe not a 30% decline. I think that you have just too much money being pumped in by the central banks and our government to facilitate that kind of drop. What I do think you'll see happen is a lot of volatility happening between now and the election. A ton of uncertainty tonight. The debate. Sorry. Yeah. I will not be watching the debate. I do not want to watch two people who... I don't even want to say it. I'll probably offend some people. But basically, they're going to have guys just yell at each other and go back and forth on how one of them's a loser and the other one's a loser and you're a loser and you're stupid. I got better things to do with my life, so I'm not going to be watching those presidential debates. But it could add some serious volatility to our markets tomorrow, specific sectors. But it's the first one of many. We got plenty of time there. Let's see. Did you already talk about Disney? No, I didn't mention that, Kevin. It's one of the things that's kind of a recent news release for Disney reporting that they're laying off a ton of people. And, coming on this, I don't think it's a real shocker that Disney would be doing that. Here's the chart of Disney so you guys can see. I've got it on a monthly, and I'll switch that to a daily here. Slight little negative blip today. Nothing really that major for Disney. But I don't think that this is any surprise, right? You're going to keep these people on forever? No, they're going to have to start laying off more and more people to fit their earnings, right? Parks aren't opening up. We're not going to see the grand openings like they were expecting, and that's going to get pushed a little bit further down, especially out in California. So I don't think this comes as any surprise. Of course, a lot of you might look at it this way and say, well, when you have a layoff announcement like this, where they're laying off tens of thousands of people, 28,000 in this case, a lot of people view that as very negative for the company. In actuality, it can be very, very good. Hacksaw, not Jim Duggan, that was a WWF reference from when I was a kid. Al Dunlap was one of the famous CEOs where he would come into a company and he would just start laying off people left and right and cleaning house. And what his goal was to get their earnings back on track and get the company fundamentals looking great again. So first off, you get rid of a bunch of overhead costs with employees. You start selling off unperforming assets here. In this case, Disney starts off with the employees. We'll see if they get rid of underperforming assets later on. But right now, I don't think that's any real shocker that they're starting to lay off more and more and more people. So, no big deal. Yes, level 2. It's something that I don't know. How many of you are watching the debates now? You guys watch those debates? I know I'll probably just get the Cliff Note version, and it's almost embarrassing for me to watch the talk tracks that's going to go on and on. I feel like out of 330 million people, these are the two most educated, intelligent, leadership background, presidential type people that we could get. I feel like we could have done a lot better, but that's different. Mickey Mouse will always be employed, Joseph, always. Okay, that's enough. I don't want to go down any political rants here, guys. I always end up offending people, so I will definitely take that Cliff Note version. Guys, tomorrow's going to be a little bit different show. Tomorrow, I've got Colin Teddards of the Investors channel on. For you, if you haven't looked at his YouTube channel, it's called the Investor Channel. The guy does really great breakdowns of fundamentals of companies. So we haven't really had a chance to talk either. We'll see what's going to happen on today's show. Maybe break down a couple different companies. If you have a specific security you want us to analyze from a fundamental perspective, I'm not your guy, but Colin is. So send me in those ticker symbols. As you know, you can go to TraderMerlin.com and just send your messages in there. Or you can do me a favor and just post them down below the YouTube video. Just say, hey, can you analyze XYZ tomorrow or Amazon or whatever you want? I don't care. Send it on in. I'll see if Colin and I can get to as many of those as we can for tomorrow's show. We'll definitely look at some of the fundamental side of things because, as you know, I'm a technical guy. Fundamentals, to me, it's just too easy to fudge those numbers and lie on a balance sheet. I think the charts don't lie. So you're going to have Colin on the program. Should be a pretty good one. All right, guys, we are going to wrap it up for today. Hope you guys enjoyed that session with Jeff Manson. If you want to know more information, his Twitter handle is at JMANS1111 on Twitter. Check it out. I will see you guys tomorrow. Take care, everybody.